Hello everyone, and welcome back to the Gold Too Long Didn't Read. Guys, did you catch that? Gold printed a massive, impossible to miss green candle yesterday, surging over $115 in a single session. I wouldn't call it a total shocker, but given how sluggish the market was last week, this is a textbook bullish counterattack. So, what actually went down behind the scenes? Did the smart money finally reach a consensus? You bet, and the reality is wilder than a movie. First, the US dropped a bombshell over the weekend. Special forces raided Venezuela and literally brought President Maduro back to the States. Combined with unexpectedly weak US economic data, you've got the perfect high-octane fuel for this gold rally. Now for the million-dollar question. With this geopolitical storm and Trump's unpredictable strategy in South America, is this rally just a flash in the pan? Or is it the start of a new leg up toward $4,550 or even the $5,000 mark? In today's video, I'm not just breaking down the capital flows behind this drama. I'm also using technical analysis to map out the key battlegrounds to watch in the short term. This is a deep dive, so make sure you stick around until the end. Alright, let's rewind and look at how this violent rally actually took shape yesterday. The fuse was lit when US troops moved on the Venezuelan capital and captured Maduro and his wife. Global markets panicked instantly, and gold, the ultimate geopolitical barometer, reacted first. Safe haven money flooded in, driving prices up in a massive vertical move. Plus, the bulls got a second tailwind yesterday. Just as traders were digesting the war headlines, the US released the December ISM manufacturing data. We'll look at the numbers later, but simply put, it was a miss. This sparked fears about the US economy, causing the dollar to slide and giving gold another boost. So we've got a double whammy, geopolitical friction plus weak economic data. Even with talk of a Nobel Peace Prize, Trump's move in Venezuela has the market smelling major uncertainty, and uncertainty is exactly the fuel gold bulls love. However, as a veteran trader who's been through the ringer, I need to pour some cold water on this. Yes, yesterday's rally was fierce, and one big candle can flip the sentiment, but we have to be careful. Sudden geopolitical events like this are often pulses. They spike hard and then fade. If this doesn't escalate further, that emotional premium could face a correction. Before we jump into the charts, let's get the standard disclaimer out of the way. Everything in this video represents the personal views of the Gold Too Long Didn't Read and is not investment advice. Financial markets, especially right now, are extremely volatile and unpredictable. Please think for yourself and assess your own risk tolerance before placing any trades. Alright, disclaimer done. Let's pull up the candlestick chart and see what the price action is really telling us. Switch your charts to the 4-hour time frame. You can clearly see gold has been on a tear since yesterday, but the bulls aren't out of the woods yet because they're facing a major stumbling block. We called this out in yesterday's video. The 4,430 to 4,450 zone is a massive overhead resistance level. Right now, price is just grinding right against it. If the bulls can gather momentum and ride this tailwind to a clean break above 4,450, and I mean a solid 4-hour candle close, not just a wick that pokes through and pulls back, then the sky's the limit. Once 4,450 holds as support, the next short-term target is the psychological 4,500 level. If they blow through that too, last week's all-time high of 4,550 will be an easy target. But be careful, there's clearly heavy selling pressure here. If gold tests the 4,430 to 4,450 zone but fails to break, leaving long upper wicks or bearish candles, it means profit taking is kicking in and the momentum is exhausted. If that happens and price drops below our defense line at 4,430, we're likely entering a correction phase. The first support level to watch is the 4,400 round number that's a very strong demand zone. Worst case, if 4,400 doesn't hold, it confirms yesterday's rally was just an emotional bubble. Gold could give back its gains and retest support around 4,350. Now that we understand the technical picture, tempting but full of traps, let's look at the fundamentals. This is what will actually decide the long-term trend. The first core driver is the US aggressively reshaping its backyard in South America. Honestly, the blitz on Venezuela left the world stunned. This isn't just about one leader. It's a hardline signal to the world, especially South America. Get on board or get out of the way. Think about it. We know Trump doesn't play by the old rules. He might be eyeing that Nobel Peace Prize, but his way of achieving peace seems to be through physically removing the opposition. This gives the market huge room for speculation. Venezuela might just be the first domino to fall. With Trump's current momentum, the market is worried. Who's next? Cuba? Colombia? Is he going to make a move on Greenland too? This extreme uncertainty is gold's best friend. We used to focus on Russia, Ukraine, or the Middle East, thinking if those cooled down, gold's appeal would fade. But the game has changed. Even if Eastern Europe quiets down, the fire is now burning in America's own backyard. This structural shift means safe haven demand is now a long-term theme. As long as this aggressive foreign policy continues and U.S. troops are conducting raids abroad, gold as the ultimate hedge will see its floor price keep rising. It's like living in a dangerous neighborhood. Sure, one thief got caught today, but there are plenty more out there. You wouldn't take down your security door, right? Gold is that security door. Of course, I have to remind you that short-term sentiment has its limits. If the Venezuela situation doesn't explode into a larger conflict, the market's panic over this single event will fade. That's why I warned you. Watch out for a pullback once the adrenaline wears off. This is crucial. Don't just blindly ape in because the news is hot. You have to learn to distinguish between a temporary spike and a real trend. On that note, I want to ask you guys, do you think Trump's move was about oil or just a flex? Drop your thoughts in the comments. Let's discuss the conspiracy theories. Done with the war talk. Let's turn to the second driver, weak U.S. economic fundamentals and the dollar's failed bounce. Besides the arrest drama, one data point completely stunned the dollar bulls, the U.S. December ISM Manufacturing Index. How important is this? It's the barometer for U.S. factory health. The result? It came in at only 47.9, missing the 48.4 forecast. Worse, it's been in contraction below 50 for 10 straight months. Guys, 10 months of shrinking. This shows U.S. manufacturing isn't getting out of the swamp. It's sinking deeper. Looking closer at the report, it's a disaster. New orders have dropped for 4 months, no buyers, and employment has been down for 11 months. Factories are firing. But the killer? The prices paid index is rising. Costs are up while orders are down, the classic prelude to stagflation. Business owners in the report sound incredibly negative. Chemical sector, not a good year. Machinery, orders are grim. Fabricated metals predict a 25% crash to start next year. Does this look like a strong recovery to you? Once this data dropped, the dollar index, DXY, which was trying to stage a comeback, immediately deflated. Looking at the DXY chart, it tried to push up yesterday but got slammed at the 98.7 to 98.8 zone. It's like there's an invisible wall keeping the dollar down, which is music to gold's ears. We all know gold is priced in dollars. Dollar down, gold up, it's a seesaw. With U.S. data this ugly, expectations are rising that the Fed will have to keep cutting rates to save the economy. As long as the dollar stays weak, gold has a constant source of power. To sum up, on one hand we have geopolitical fire, on the other the gloom of recession. Both are pushing gold prices higher. It's like gold is in a twin-engine sports car. One engine is safe haven, the other is weak dollar. As long as neither engine stalls, this car will keep on moving. Alright, enough analysis. Let's wrap up with the key takeaways and some actionable advice. First, the double whammy of Venezuela and ISM data allowed bulls to recover half of last week's losses. Sentiment is bullish for now. Watch the battle around 4,450. If gold smashes through 4,450, long-term holders can aim for 4,500 or the 4,550 high. If you don't have a position, do not FOMO in right under 4,450. You'll get trapped. Wait for a breakout and retest. That's how the smart money plays. Second, stay sharp. Trump's policies are volatile. If Venezuela cools down or strong data pops up, gold could correct any time. Set your stop losses. Never trade naked. Finally, in this age of uncertainty, gold is an essential part of any portfolio. Whether you're day trading or holding long term, understanding these macro trends is the only way to stay ahead. That's it for today. If you found this helpful, smash that like button, subscribe to the Gold Too Long Didn't Read, and hit the notification bell. See you in the next video. Happy trading, and let's go get those gains. Later.